Hello everyone, and thank you for joining us today. My name is Stephen Primo. I am the president and founder of Specialist Trading. And for those of you who are unfamiliar with our website, we are your premier source, online source for education and trading just about any market there is, from stock market to the E-mini markets to the Forex markets as well. Now, just to give you a little bit of background about myself, I have been trading for nearly 36 years now. I started out my trading career on the floor of the Pacific Stock Exchange. I was actually on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette, hence the name Specialist Trading. I traded through just about every market environment imaginable, from the crash of '87 to the great bull market that ensued after that. I traded through choppy markets, through quiet markets, through tremendously volatile markets. And in the mid-90s, I left to pursue my own trading, to manage money, and to also learn about trading other markets. I began trading before there was even an E-mini market. I was trading the large S&P cap at the time. About 5 years ago, I was asked to be the director of education for a number of websites to manage their trading accounts and also to teach their systems. I did that for a couple of years, but I got such a large following that people wanted me to teach what I was actually trading. So I started Specialist Trading roughly about 3 years ago, where, as you can see here, I share the insights, wisdom, and the trading strategies that I learned from the floor. So these are all things that I use in my personal trading. These are things that I learned while I was trading on the floor, and all of our members and students at Specialist Trading are privy to everything that has taken me roughly 36 years to accumulate here. Now, what we're going to speak about today are the 3 main components you need to have a successful trading strategy. In my opinion, the reason why people fail or are immediately blown out, whether you're trading stocks, the Forex markets, or the E-mini, is because you don't have at least 2 of these 3 components in place. And I feel you should have at least 2, but probably even better to have all 3 of these main components of a successful trading strategy in place. We incorporate all of these in our strategies at Specialist Trading, regardless of what market we're trading or what time frame. And I'm going to share with you exactly what they are, so you can apply them to your own strategy as well, or you can use them to build a strategy on top of something that you may have an idea about. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using these 3 components of a successful trading strategy. But please remember that we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention, I notice there's a lot of new people here in today's presentation. That's great. I love to speak to different people and new people that have never heard about Specialist Trading before. But if you've come to my webinars in the past, you know that I love to answer questions, but I like to wait till the very end. I know a lot of educators like to take questions during the presentation. I'm a little bit different. I ask that all of you, if you have a question, please wait till the last 10 or 15 minutes. This won't be real long, so you can just wait, write it down, or try to remember your question. And I promise I'll get to each and every one at the end. If you happen to come up with a question once we've concluded, don't worry. I'm going to leave you an email address as well as a phone number where you can contact us and ask us any question you may have as well, either about one of our strategies or about something I presented today, one of the educational tools that you'll be learning today. Okay, so once again, if some people came in late, please, if you have any questions, wait till the very end of the presentation. I have a little question and answer box right here, and I'm going to close it during the presentation, so I won't even see your questions anyway. So please wait till the very end to ask any questions. Now, I want to start off by just giving you a little bit of background about myself. As you heard in the very beginning of this presentation, for some of you that came in late, I was a specialist on the floor, but my first year or so as being a trader, I struggled tremendously. I just couldn't seem to get to make ends meet. I couldn't seem to get forward. My trading was, my P&L looked more like a roller coaster where I'd be, flying high in April and then shot down in May. I would try and pick tops and bottoms probably the same way about 99% of all traders do, and this would work great for a time, and then I would give it all back and say 1 or 2 trades. So I would have 3 or 4 fantastic months, and then I'd have 1 month where I gave everything back, and I had nothing to show for it. So it was beginning to become very discouraging. In fact, I wondered whether I was going to have much more of a time as being a specialist on the floor. It wasn't until I had a few elite traders, these were specialists as well, who were able to turn my way of thinking around, more so than trading, but my way of thinking, so that I ultimately was able to become consistent, not hitting home runs, even though that can happen every once in a while, but the trading methodologies and the strategies were able to get me on that consistent path. And that's the edge of the specialists. That's what they taught me, and that's what I try to teach to all my students. My goal is to teach you how to trade with the Specialist Edge. Now, even though Specialist Trading, for all of our members, we give out daily and nightly signals prior to the entry date, and we tell you where to enter and where to exit and where to place your stops. Now, we're really not a systematic or just simply a signal generating company. We don't want to really be fulfilling that function. We want to teach you how to spot these trades, how to see them in any time frame, whether you're trading 5-minute charts or daily or monthly charts, and then ultimately you'll be able to do it on your own. I know a lot of people out there have asked me to trade for them or whatever, and really it's about teaching you how to do it. It would be comparable to learning how to play golf. Say you had a tournament coming up, and you asked your golf instructor to play the tournament for you. And in actuality, you've got to play it yourself. He's just instructing you or fine-tuning your golf swing, and so that you can actually go there and play yourself. So that's what we do. We teach you all the tips, techniques, and methods I've learned in my 36 years, ultimately, so that you can apply them yourself to your own trading. All right. So, as you stated in the beginning of the presentation, what we're going to be talking about here are the 3 main components of a successful trading strategy. And one of the basic things that comes up is people think that these are ultimately brand new ideas or some different system or some different indicator that no one's ever heard of. Most of the things that we teach and use at Specialist Trading you've already heard of before or you've used. You just have used them or applied them incorrectly. So nothing's going to be shocking here that you haven't heard or seen before. But they're extremely, extremely important, but at the same time, extremely simple. All right, so let's start out. You may want to get out pencils and paper and write down exactly what these 3 main components are. Let's start with component number 1. Remember, we need all of these things, really need all of these things in order to have a successful strategy. And by successful, we just mean consistent. Remember, we don't want that roller coaster effect the way I began trading where you'd have 5 or 6 great trades and then 1 terrible trade where you gave away everything you just made. So component number 1 is something I'm sure you've all heard before and something you probably try to instill in your trading, and that's always to be in sync with the trend. Now, as we stated, this is nothing new, this is nothing eye-opening or shocking. Everyone tries to trade in sync with the trend, but probably they've set it aside or they used it for a while. It didn't give them the results they liked, and so they probably stopped trading with the trend and went back to trying to pick tops and bottoms. And we feel the reason why is because there are just too many ways to discern what the trend is. One person's uptrend can be another person's downtrend. So there's just so many different ways, different educators saying this is what the trend is, no, this is what the trend is. We feel we really have one of the most powerful tools for determining what the trend is, and we'll show you right here a perfect example. Now this is just a generic chart. We purposely took out whether it was a stock or a 5-minute chart, the E-mini or a Forex chart, because this concept applies to everything and anything you're trading. As you see here, we have a bar chart, doesn't matter what time frame, and we're in this kind of a rangy move. Someone here just off site would say, well, there's no real trend in place. We're just kind of going up, moving back down lower, heading back up, and every time we hit that top of that range, we head lower. So most likely we're going to head back up and then hit the top of the range and head back lower. So to the untrained eye, someone would say, well, there's really no trend here at all. But when we apply our main tool to discern trend, it's extremely simple. All we do is we apply a 50-period simple moving average, as you see here. And what we do is we ask ourselves a question. We say, where is price in relation to that 50-period simple moving average? And you'll only come up with 2 answers, because if price is above, then this means that most likely the trend is up. And you're only going to look for buy setups or buy signals. If price is below, you're only going to be looking for sell signals. Most likely the trend is down. So it's that simple. You don't have to complicate your trading. Remember, this is one of the things that was instilled in me as a trader on the floor. My trading was far too complicated. I had too many indicators. I was subscribing to too many newsletters. I was following the news far too often. And my mentor said, Steve, keep things simple. It's the easiest thing in the world to complicate your trading. It's the most difficult thing in the world to simplify it. So rather than look at 1,000,001 tools, just apply a 50-period simple moving average and ask yourselves, where is price? If price is above in relation to that, you know that you should only be looking to go long. All right. Now, we still don't just buy at the market blindly. We have to wait for some type of setup, some type of structure. But this already has taken away all of the doubt of what direction you should be trading. All right. So that's component number 1. So regardless of what time frame you're looking at, if you're an E-mini 5-minute trader or you're a tick trader, or if you're a monthly trader of the Forex markets. It does not matter. I want you all now to go plot a 50-period simple moving average on every chart and ask yourselves, where is price in relation to that 50-period simple moving average? All right? All right, let's go to component number 2. Here's the second component you need to have a consistent or successful strategy, and that's always look for signals within pullbacks. Okay, so now that we know whether we're going to be buying or selling according to the 50-period simple moving average, we're not going to just simply buy at the market. We're not going to try and jump in on a real strong trending upward move or downward move. We're going to look only for signals within pullbacks. So what exactly does that look like? Let's go back to the same chart we looked at earlier. We're above the 50-period simple moving average, so this means we're only going to look to go long. Now, what most people would normally do in a situation like this, well, they'd say, well, okay, Steve, I see some type of resistance here. When we break out, this is when I want to enter. So you would have jumped in and bought right here. And usually, this turns out to this scenario. Look familiar? You jump in, and the minute you buy, guess what happens? It goes straight down. And most of the times, you're stopped out, okay? The trouble is that your idea wasn't wrong. We were in sync with the 50-period simple moving average. It's just that your entry was inaccurate. You didn't have a fine-tuning on your entry. So rather than look for signals on breakouts or place a limit order to go long or jump in at the market, what we want to do is look for signals in this area right here, all right, this pullback, because we're still above the 50-period simple moving average. So anywhere within this range here, whatever your strategy is, whether it's based off one of my methodologies or whether it's based off of the full moon, it doesn't really matter as long as in this pullback you have a signal generated. That's what you're looking for. Okay? This is a high probability area to go long. Now, obviously, if we're going short, it would just be the opposite. Price would be below this 50-period simple moving average, and you would have price bounce up or rally up. And in that little bounce, that's where you would look to go short. Okay? All right, so that's component number 2. We're only going to look for signals that are in pullbacks. This is where we look to buy. All right, so now let's go on to component number 3. The last component that you need in order to trade successfully or consistently is enter upon the confirmation of the trend. Well, what exactly does that mean? I know many of you may be saying, well, I thought we already found out what the trend was. Let's show you what our confirmation technique is. All right, we're looking at the same chart again. Once again, we are above the 50-period simple moving average. We have a nice pullback in place, so we're looking for a signal there. Let's say we had a signal right here to go long within the beginning of this pullback, okay? Rather than jump in at the market or rather than place a limit order somewhere down to buy, what we want to do is use our confirmation method. And what that is that states that in this pullback, once we get a signal anywhere within the pullback, we are only going to go long once price trades one tick or one pip, regardless of what market you're trading, above the previous bar's high, okay, as we see right here. So let's say your signal was generated somewhere around this level. You wouldn't just simply buy at the market because, once again, you probably would have gotten stopped out. What you're going to do is wait for confirmation that we went one tick above the previous bar's high. And as long as your strategy or your methodology is still saying it's okay to go long, as long as the signal is still in effect, you're going to continue to just watch this and continue to monitor it all the way until ultimately we trade above. And that's your signal to enter somewhere around here. All right? So you sidestepped all this sell-off. You entered once the trend resumed. You see, this is the confirmation that we're going back up. We had no confirmation as of yet. But once we traded above, that's your confirmation. So this would be your place to enter or to buy. Regardless, once again, if this is a 5-minute chart of the E-mini or a monthly chart of Apple, it doesn't matter. And then look what happens. The trend resumes to the upside. Do you see how simple and easy this is? Rather than trying to pick tops and bottoms or trying to, place limit orders or jump on in once you think it's taken off or scalp, just listen to what the market is telling you. The market is above the 50-period simple moving average. So it's telling you you should only be looking to go long. All right? The market is pulling back, so it's telling you look for a signal to enter. Once you've gotten that signal, the market is telling you only enter once we have confirmation that we've traded above the previous bar's high, right here. That easy, that simple. as always, if this were a sell example, which we'll show you in just a few minutes, you would just reverse all these different components and you would wait for price to trade one tick below the previous bar's low. All right, so let's look at some examples in the different markets. We'll show you some examples here, and then we'll show you some current examples as well. Here's an example in CRM. This goes back about 3 or 4 months. This was when we were in the end of summer, beginning of fall. As you can see here, the first thing we ask ourselves is, where is price in relation to the 50-period simple moving average? And as you can see, price is above. So this means we're not even going to consider going short CRM. See, this is where most traders fall into trouble. They try and pick a top or a bottom. Just listen to what the market's telling us. The market's telling us that most likely we're going higher. So we're looking to go long CRM, but we have to have some structure. Remember, most traders would say, well, I'm going to buy once we break out above, this top here, and that means we're going higher. Now, if you follow that, you would have purchased somewhere around these levels, and look what had happened. You would have sold off and probably got stopped out. But this is the prime area where we're looking for buy signals, because this is the pullback. Remember, we're looking to go long somewhere within this sell-off, because we're still above and you've gotten a buy signal. So we apply our confirmation technique. We're only going to purchase once we trade one tick above, and you would have purchased right here once we traded above roughly about the 145 area. And then you could apply this to trading the actual stock, to trading an odd lot. Doesn't matter if you wanted to apply options. You just have to transfer over to the option market. But this is where you would purchase regardless. And once you enter, look what happens. In roughly 2 weeks, the stock went up 14 points. Okay? All without the aid of being in some trading room or chat room, all without the aid of having to look at news or seeing what the earnings were. Remember, we're not trying to complicate our trading with all these things. My mentors told me that these things are really useless noise. These are the things that don't get us on the path to becoming successful. These actually are the things that keep us away from becoming successful. So try to get rid of all these things or lessen your dependence on them, news or trading rooms or chat rooms and tons of indicators, and keep things just as simple as possible, and you'll get on that road to consistency. All right, that was in CRM, and that was just roughly in the summer. Let's look at something a little more current. This is a chart of Apple going back to just about 3 weeks or so. Now, obviously, Apple has been falling out of bed lately. We're below the 50-period simple moving average, so remember, we're not even going to consider picking a bottom in Apple. That's how most people have gotten killed this whole time, holding Apple or looking for a bottom. We're just going to concern ourselves with either, sitting on the sidelines waiting for Apple to go above the 50 period, or we're going to look and be more aggressive and look for shorts. So someone could say, well, I'm going to short it here, Steve, once we break this current low here, and look what would have happened. It would have gone straight up. Okay? So remember, we're looking to go short in this upward bounce. This is a pullback to the upside. So what you want to do is look for a signal once you've started to rise. Now, if you don't have a signal, well, then you can't go short. But let's say your strategy, whatever it is, gave you a signal to go short Apple, okay? Now, once you get that signal, let's say you got it down here, rather than just simply sell at the market, apply the confirmation method, meaning you're only going to go short once the stock trades one tick below the previous bar's low. As you can see here, on this day, which was, I believe, the 3rd of January, just 2 or 3 weeks ago, you would have traded below the previous day, and so that's your signal to go short. So you would have entered once price traded at this point, and you would roughly been short about 540 roughly. And then look what happened, okay? 50 points to the downside in the next 2 weeks. See how simple that is. Remember, all without the aid of seeing what's going on in the world, not looking at economic news, not concerning yourself with a ton of indicators, but just learning how to listen to the market. All right, so those are 2 examples in stocks. Remember, this can apply to a 5-minute chart. Let's say you're day trading Apple or you're day trading another stock. It doesn't matter. The same concept will work if you're intraday trading as well. Now let's see how this applies to S&P E-mini. Okay, I know a lot of you like to trade intraday, so let's see some examples of the E-mini on an intraday basis. Same concept applies. This was just about 3 or so weeks ago. We were, for all intents and purposes, above the 50 period right here. Even though we kind of intersected it below, the majority of price was above, and we only had one close below, but then we closed back above. So we could say that price is above the 50 period, and we're only looking to go long. Let's say we got a buy signal down here, okay? This was a nice little pullback, right? So we got a buy signal. We didn't buy at the market. We simply waited for price to trade one tick above the previous bars on this 10-minute chart. And on this next 10-minute time frame here, roughly about 8:45 in the morning Pacific time, you would have entered to go long about 1458, 1458.50. Okay? And look what happened in the next couple of hours. 9 points to the upside. Now, we're not saying that you would have held it this long, but we show you different ways and techniques in which to hold a position longer if you'd like, or you can use the standard exits and get out with a quick point or two. It's up to you. Remember, we're an educational company. We're not simply telling you there's only one way to trade and then putting together statistics and showing you what the returns were. There are 1,000,001 ways to trade. Each way should fit the personal trader trading that particular strategy. So there's no way we can supply statistics to show you, how well this would have worked. It really changes for each and every trader, whether you want to trade aggressively or conservatively. Now, if we look here, going back just to, this was at the very end of December. This was the last trading day, I believe, or coming into the last trading day of December. 5-minute chart of the E-mini. As you can see here, we ask ourselves, where is price in relation to the 50-period simple moving average? Well, price is below. So rather than try and pick a bottom the way 99% of all traders would, we're not. We're going to only look to go short. So rather than try and go short once we broke support and resistance, this is another thing that we don't teach at specialist trading. One trader's support is another trader's resistance. It's too subjective. There are a lot of traders that make really good money off of support and resistance, but most people aren't able to find those points. It's just too subjective. It's not cut and dry. We'd rather have something that's more cut and dry, like a 50-period simple moving average, telling us to go short, and plus the simple rules that we apply to all of our strategies. So rather than go short here, if you had done that, you most likely would have gotten stopped out. Remember, we're looking for pullback. So on this little rally to the upside, this is where you're looking for some type of signal. Now, one of our signals, strategy number 4, gave a great sell signal here. So we would have gotten short the E-mini on a 5-minute chart the minute it traded below, which is right here. Now, you could have taken our generic exit and exited with a quick couple of points, or you could have held on and used our aggressive mode of trading, which we teach you, and held on for another 10 points. All because you listened to the market, we weren't trying to pick a bottom. Why? Because we're below the 50 period. And we weren't trying to sell at the market. We're mainly just looking for pullbacks. All right, let's say you say, well, Steve, this is great, but I trade the Forex. I like to trade daily bars of the Forex or maybe intraday Forex. Well, that's fine. Let's look at some Forex examples. I know you're some Forex traders out there. Here's an example on a 60-minute chart of the euro-yen. This was going back to the end of November. We ask ourselves where price is in relation to the 50-period simple moving average. Well, price is above. So this means we're only going to be looking to go long. Now, most people would say, boy, this is a great resistance right here. The minute we break above, I'm going to jump in and buy. Okay? This is the way you're taught, right? This is the way you look for these certain patterns, flag patterns, and different consolidation patterns. So you would have jumped in and bought once you traded above. And most likely, you would have been stopped out. So what we're looking for is really not to buy on consolidation. Even though we have some methodologies that use consolidation, we're more concerned with pullbacks right here. We're looking for this sell-off once you get a buy signal. As long as we're above the 50 period, this is all we're concerned about. So we're being issued a buy signal with one of our strategies, so we apply the confirmation method, meaning we'll only enter once we trade 1 pip above the previous bar's high, as long as the signal is still valid. As you see here, we traded just above on this hourly chart of the euro-yen, so you would have entered roughly about 104.50, and the next day you have 170 pips, which is over roughly about $1,800 or so, trading one of the contracts. Now that's on an hourly time frame. Let's say you're trading the Canadian dollar on a daily time frame. Okay, same rules apply. Nothing changes if we're just using these components. We're, for all intents and purposes, below the 50 period. Even though we're kind of touching it here, the majority of price is below, and we are still closing below. Let's say we had a signal somewhere on this little pullback to the upside. Rather than just try and pick a top, we're going to apply the confirmation method, meaning we'll only short once price trades on the Canadian dollar 1 pip below the previous bar's low. This is our confirmation that we're heading back down again. Remember, we're looking for confirmation that the trend is resumed lower. So as you can see, we opened unchanged, went a little higher. Guess what? came all the way back down, sold off. So this is where you would have entered to go short on a daily time frame, and then 250 pips in the next month to the downside, over $2,500 trading one contract in the Canadian dollar. Okay, so let's review. These are the three main components that you can actually apply to your current strategy. Let's say you have something that you feel comfortable with, that you're doing all right with, but you just want to kind of kick it into gear and make sure that you fine-tune it a bit. Well, you can apply all these components we talked about. But remember, you must be in sync with the trend. And the reason why most people give up on trend trading is because they're taught the wrong way to view what the trend is. Everyone has a different way of looking at what the trend is. I know I did. When I was trading on the floor, I had tons of indicators crossing over. I was looking at a higher time frame to discern what the lower time frame was. I was listening to different trading rooms and newsletters telling me what the trend was. Easiest thing in the world, what my mentors taught me, is just plot a 50-period simple moving average. That's all you have to do, whether you're trading a 5-minute chart or a monthly chart. And then ask yourselves, where is price in relation to that 50-period simple moving average? If price is above, then any signal you get, you're only going to take the ones that are telling you to go long as price is above. If price is below, then you won't take any buy signals. You'll only be looking for shorting setups, okay? And then once you get a signal, look to enter that within a pullback. Don't just simply buy at the market or try and enter once you think you've broken out of a range. Remember, look for signals in a pullback. This is a higher probability way to enter into a trade. And then lastly, use the confirmation method. Many traders have the right idea for entry. In other words, you have the right idea to say go long a stock or go short the E-mini. It's just your entry, the fine-tuning process is not up to par. What the confirmation method does is that gets you, it fine-tunes your entry so that rather than picking the top or the bottom, it's just going to get you in most times when the trend has resumed in your desired direction. That's its main purpose. Okay, so you won't have to sit through being stopped out or wondering if you made the wrong decision or not. You'll simply get in most of the times, even though nothing's guaranteed. Most of the times you'll get in once the trend has resumed in your favor. Now here are things we want to also bring up. These are very important points to remember. I know many of you may be looking at this and your eyes may be lighting up and you'll be going, boy, this is amazing. I'm going to start trading this tomorrow. Please remember, what I showed you today are the three components that you should add to a particular strategy. All right? They are components. They are pieces of the puzzle that make up a successful or a consistent strategy. But please remember, they are not strategies on their own. You cannot simply apply this tomorrow and think that you'll produce any favorable results. These are not strategies. In order to have a valid strategy, you also have to have information, pieces of the puzzle concerning stop placement. Where are you going to place your stop? How about exit signals? Where are you going to exit? Are you going to just get out with a quick profit? Are you going to stay in longer? What's it based off of? And then money management. You need to know a lot about money management, how many contracts to trade, how many shares to trade. Should you move your stop to break even? Should you ride the trade and raise your stop or lower your stop in order to stay in much longer? These are all extremely, extremely important things that you must know in order to trade these three components. Okay, so please remember, these are not strategies on them in and by themselves. They are just simply components that you should be adding onto your current trading strategy or that you can build a strategy off of. Now, one of the great things about specialist trading is that all of these components are included in all of our strategies. They are applied, they are implemented in all of our strategies. So there isn't a strategy where we don't use all of these three. So as you see here, this is the homepage of my website, specialisttrading.com, and you can see we have three different categories. We have courses for stock trading, we have individual courses for E-mini trading, and lastly, we have individual courses for Forex trading. These are all different courses where each specific one has up to 10 different strategies for that particular market. Many strategies are built for short-term trading, others are built for longer term, but each category, each different market holds up to anywhere from 6 to 10 specific different strategies designed for those particular markets. Now, if you'd like to become a member of Specialist Trading and get the full suite, the full package of all of our strategies in any one of these particular markets, it would run you anywhere from $3,000 to $5,000. And we have many students who are total members and they have the full package where they have all of the stock trading methodologies or all the E-mini trading methodologies. But at the same time, we offer individual stock courses such as you see here. This is probably one of our most consistent strategies. I'm going to show you some current examples that were just within the last couple of days or so. This is Primo strategy number 4, and even though this particular graphic here shows the E-mini momentum trader strategy number 4, we also have strategy number 4 for stocks. We have it for E-minis as you see here. We have it for ETFs, and we have another strategy for Forex. They're all basically pretty similar to each other, but just a few different variations to fit that particular market. All right, and as you can see here, we have a great discount. These courses, these individual courses that we have, or all of our different strategies, usually run $695 per individual course. But as a special offer to all the attendees viewing this presentation today, we're discounting at $200 down to $495. Now, this is for a limited time only. But if you decide to become a member of Specialist Trading and pick up one of these individual courses, you'll have instant course access. In other words, if you sign up today, you'll be able to get all the rules and be able to start learning how to trade this as early as tonight. This comes with detailed online instruction, a total of 5 videos for this particular course. Some of our other strategies come up with upwards of 10 videos. In the videos, I go through and explain all of our entries, all of our exits, and all of our stops. Plus, I teach you how to trade it different ways. That's why, once again, this is not a systematic company. We do not have stats on any one strategy because there are 1,000,001 ways to trade them. You can trade them conservatively. You can trade them aggressively. So we show you exactly how to do that to fine-tune each strategy to fit and meet your needs. This also comes with signal alerts on daily bars. So the night before, you'll receive an email, or you can come to the site and see where we provided you with a signal alert telling you where to enter for the next day's trade. We also provide you with weekly video trading lessons like you saw today, where we go over different tips and techniques to elevate your trading, to take you on to the next level. And as a special for all of the MetaStock users, we have free MetaStock software add-on, where you apply this add-on to your MetaStock software, and you can see arrows appear where there are buy and sell signals in real time or in any time frame that you're looking at. This will be available in February. So for all the MetaStock users, you can become a member and start using this as early as February. And lastly, you get access to my personal email. Okay, you can ask me questions at any time. I get emails in the middle of the night. I get them in the middle of the morning, and I answer them usually within a day. So many times I'll answer your question within 5 minutes. So this all comes, usually this is for $695. As you can see, for attending today, we've discounted this down $200 down to $495. But please remember, this is for a limited time only. Now, as we stated, this is just one of our strategy courses. We have over our strategies are traded in over 40 countries around the world. They're traded from anywhere from hedge fund managers to people who have just started trading in the last year. So don't feel as if you need to have been trading 36 years such as I have. You can be trading for a couple of weeks. These strategies are extremely simple. As I stated, our goal is to teach you how to trade with the specialist edge, and that's rooted in simplicity. Most of the strategies have no more than 5 rules attached with maybe 1 or 2 indicators tops. So they're extremely simple, keeping with the same information that was given to me when it changed my trading around when I was on the floor. Now let me just show you a few examples here. This was yesterday. This is looking at a chart of the E-mini. This is strategy number 4. Remember, once again, we have numerous strategies, but the beauty of strategy number 4 is that with a few different variations, we can apply it to different markets. As you see here, this was yesterday when we had a really nice run-up in the market on a 10-minute chart. These were all buy signals. So if you're an intraday trader using strategy number 4 for the E-mini, you could have taken advantage of all of these buy signals using that particular add-on. Now today, I rushed like crazy to get in this. A lot of you who are intraday traders, in the last half hour of the day here, we saw the market kind of fell out of bed and there was a nice sell-off. Well, if we look here at another 10-minute chart of the E-mini, guess what? Strategy number 4 gave us a great sell signal right here, roughly around 11 o'clock to go short. And you would have held on to the short if you trade our aggressive trading style all the way to the very end. Okay, so you would have gotten short roughly about 1502, and you could have held on to roughly 1496. So this is once again, you can see the really great ability that this strategy is able to transfer over in the different directions. Now let's say you trade stocks. Okay, well we have a variation of strategy number 4 for stocks. If we look back here on the 22nd of January, which was just last week, guess what? Strategy number 4 issued a buy signal in Facebook, FB. Okay, so you would have had a nice, real quick trade going long. Strategy number 4 with Facebook. So this is another example. Let's say you don't trade stocks, you trade the forex markets. Well, here's another example, the euro-yen. This was on the 9th of January, the beginning of this month, just 2 weeks ago, giving you a buy signal to go long the euro-yen. Okay, so this was just 3 weeks or so ago, and you could have held on to the position or taken a quick exit depending on which style of strategy number 4 you wanted to trade. So these are all actual signals that our members saw. Many of our members took these actual signals, and you can, once you decide to become a member, you can actually see these signals for yourself and take them as well. Now, as promised, I'll give you more information, but if you have any questions concerning any of our strategies or anything in terms of the cost or these specific discounts, you can go to our sister site which sells our individual strategies. That's protraderstrategies.com. It'll give you more information about each individual strategy, or you can contact John Jans. He's our senior trading consultant, and he can answer any question on strategies and discounts that you may have. You can email him at donjans@protraderstrategies.com or call him direct at area code 310-844-7220. Okay, so there's lots of ways to find out more, but if you really want to take advantage of that incredibly low discounted price on strategy number 4, you have, I believe, a couple of days to do so. You just saw real time and real world signals that were provided for our members in all these different markets. I'm sure just taking one of those would have paid for the strategy many times over. Okay, we are at the end of the presentation, and as promised, I'll take any questions that you may have. Feel free to ask. Let me just open up the box here, and let me see. It says, you are not using candlesticks charts. Is there any reason why? No, there's no reason why. It really doesn't matter. Remember, we have strategies that are basically based off of pattern recognition or just indicators. Some of our strategies rely on a specific pattern within candlesticks. Others do not. So it really doesn't matter. Once you learn how to spot these particular signals, many times it won't even matter whether you're looking at a candlestick or not. So as we stated, Dimitri, this is a great question. Some of our strategies rely on candlesticks, but others do not. So it all depends which strategy you're looking at, okay? Do you use options? Lena asked, do you use options? No, we do not. We're not an option course per se. Remember, we're an educational company. We really provide you with the information you need to take your trading to the next level. If you want to apply this with options, you can do so. We just really don't supply any information on how to trade options. We're not an options company. We don't personally trade them. I know we have many members that do apply them for options, but they use them mainly for daily bars and for stock trading, okay, for stock options or index options. And those can work fine as well. What is the Meta stock add-on called? Hi, Tony. Well, it's not available yet. It won't be available until February, but it'll just be a strategy number 4, Steve Primo strategy number 4 add-on. Okay. But once again, that will be in February that we will have this for Meta stock users. So this will automatically, as I showed you on the chart where it was the E-mini chart, you'll see buy and sell arrows telling you when a strategy signal has been generated. Okay. George is asking to please define what pullback means. Okay, that's a great question, George. A pullback just means if you are in an uptrend, all right, meaning that you're above the 50-period simple moving average. A pullback is a sell-off or a downward ascension in price within that uptrend, okay? And that's the real high probability area of where you want to look for a signal to generate a buy signal, because you're basically getting in a very low hanging fruit area, buying at a lower price. Whereas a pullback in a downtrend, meaning that you're below the 50-period simple moving average, you're looking for a rally to the upside. And so even though price is below that 50 period, you have a nice rally to the upside, and that's where you're looking for in that ascension of price. You're looking for a sell signal, okay? So pullback is just a pattern of what the stock is doing or what the tradable unit is doing. It's not an actual signal. It's not a methodology, okay? I hope that makes sense. Let's see, David asks, the market is very gappy. Does your approach help get ahead of the gap? Well, if you're talking about stocks, yes, it does. We can't really give a lot of information. I know even trading the E-minis is gappy as well. We can't give that all away because that's our proprietary methodology, but we have ways in which to get around that. Many times, though, there are no ways to get around that, and you have the decision and you have the choice whether to stay and take the trade or not. As you've seen many times, you've had a gap opening and the price continues to go higher, so it would have been great to continue and stay in the trade. Other times, the gap opening is higher and then fizzles out and then heads lower. So we teach you ways around that and teach you ways so that you ultimately will not get hurt with gapping markets, okay? Let's see, Stefano asks, can you provide any data on equity gain over a long period of time? In other words, 5 years on a daily basis using strategy number 4. Okay, first of all, Stefano, remember, once again, I've stated, maybe you came in late, we're an educational company. People that provide data are systematic traders or systematic companies, and that would mean there's only one way to trade. See, the difference between a system and a strategy is a system is a set of rules that you must apply each and every time, regardless of market conditions, regardless of environment, regardless of how much capital you have. You must do the same thing each and every time. We don't trade systems at Specialist Trading. We trade and teach strategies. Now, the difference is a strategy is 75% rule-based with 25% allotted for discretion. Okay, the discretion means you can decide whether to trade aggressively or conservatively, or you can decide whether or not to take the trade or not. Because of this 25% discretion, there's no way we can come up with any numbers because there are 1,000,001 ways to trade. We fine-tune our strategies really, as I said in the beginning, to fit your needs. We have many traders trading strategy 4 that just take the generic exit and exit immediately. We have other traders who like to stay in as long as possible and like to ride the trade as long as they can. We have other traders that like to use the maximum risk. We have roughly about 4 or 5 different stop placements you can use. So there's 1,000,001 ways, and in order to figure out the results for each and every one, we'd have to do massive testing on all of them, and that would mean we're going away from our philosophy of specialist trading. So I'm sorry, we just do not provide that, okay? All I can tell you is that these are methodologies that I've been trading. Our students continue to trade, and as we just showed you examples, they work extremely well. Let's see, Ryan says, it's tough to sit there and watch for a setup to occur. Is there, or do you have an indicator alert for these setups? Yes, well, if you are a metastock user, you will have an indicator alert that, once again, will provide arrows going up or down. This is one of the best things about being a metastock user. You'll be able in February to be able to see that add-on, which will apply. Other times, though, to be honest with you, once you learn these setups and once you see these patterns, it'll become like the back of your hand, it'll become second nature. You'll know where there's an environment for a setup to take place. You'll know where there's not an environment for the setup. So you don't have to be glued in front of your computer all day long, okay? So once again, this comes with becoming a member of the course, but if you want to be sitting in front of your computer all day long, you can do that. You can take the first few trades of the day and then forget the rest of the day. It's really up to you, but there's no need to be cumbersome and just totally watching every tick by tick to make sure that a signal has applied, and nothing happens, and then you have to wait for the next one, okay? George Alexander asks, 1 bar, several bars of price of previous move. I'm not sure what you're asking, George. Maybe if you could clarify that and send it back. 1 lower low, several lower lows. I'm not really sure what that means. Ryan asks, are your stops based on market structure or specific percentage of money management? Actually, I could say they're kind of both. Once again, without giving the methodology away, they're pretty much based on both. I don't want to give away what our members pay good money for, but many times, what was taught to me, and the thing that changed my way of money management, one of my mentors said, Steve, remember, you should always place a stop where it's wrong to be in the trade. In other words, ask yourselves, where is it wrong, or where will it be wrong to be in this trade? So if you're long, where would it be wrong to continue to be in the trade? And there are different ways we have for figuring out where that area is, and we teach that in the courses. Once again, we teach you conservative and aggressive ways. We're an educational company, and then you decide, this is where you put that 25% discretion. You apply it to see how you would like to trade it, okay? Also, Ryan asks, it seems like your strategy is more trend-based. What about market chop? This is very good. Once again, we are trend-based. You're right, Ryan. We trade trend. Once again, as my mentors taught me, always trade with a trend. That's component number 1, always be in sync with the trend. So obviously, we want to trade with the trend. But if you just study the 50-period simple moving average, you'll see how many times that keeps you out of chop. And because of our proprietary methods, the setups we're looking for, they will not appear when you're in chop because they will not meet all of the rules. So we're not here to say that it's guaranteed you won't be in any choppy markets. We can't guarantee that. Everyone goes into these small drawdowns from time to time. But our methodologies and our practices are designed to keep us out of chop as much as possible. So one of the best things is applying that 50-period simple moving average and also learning all the methodology, all the different patterns, and all the different indicators that will keep you out of chop as well. I hope that answers your question. Let me see here. George says, previous several comments are in relation to pullback. Okay, when you were saying about pullback. 1 bar, so in other words, George was asking, during a pullback, what are we looking for? 1 bar, several bars, a price, a previous movement? Well, this is great. In the strategies, each of our different strategies have different ways for discerning what we're looking for. So once again, this is part of the course. One particular methodology may have you in the strategy looking for a large pullback. Another one may have you in possibly looking for a 1 or 2 day pullback or 2 bar pullback. This all comes with your education in the course. Remember, there's not just one cut and dry way. I can't say that, oh yes, every pullback is 5 bars. That would be systematic. We don't trade the same way each and every time. We have a number of strategies that maybe would look for 10 bars within the pullback. We have other ones that are in quick markets that would look for maybe 1 or 2 bars. Okay, so it all depends on the setup. It all depends on what strategy you're trading. Okay. Pat asks, can you apply the strategy to index trading? Yes, you can, extremely well. In fact, one of our best strategies for index trading is strategy number 7, which trades the E-mini, or it also trades the Russell 2000 and the spiders and ETFs. It works tremendously well, and so it's a great methodology. And this really is applied for holding positions overnight, but it's one of our best methodologies that we have available. Yes, as I stated, strategy number 4 in particular can be transferred over into any time frame and into any market, but with just a few variations. But we also have individual strategies if you want to hold the E-mini overnight, if you want to hold the Forex overnight, if you want to hold stocks overnight. Okay. Ryan asks, do you use only the 50 or a combination of a 20 period crossover? That's a good question, Ryan. We use just the 50 to discern what trend is. I know many of our students like to also add another indicator, another moving average. That's fine as long as it stays within the great basic framework of trading. But we don't want to add tools or indicators or things that all of a sudden go out of left field, where now we're trying to pick tops and bottoms. Now we're trying to second guess the methodology. As long as it's sticking within the format that we're trying to teach, that's fine to add another indicator or another tip or technique. So many students will. The basic groundwork, though, the foundation, doesn't use any other moving average other than a 50. Now, one of the things we have to say is when we use overnight, I know a lot of you are concerned with numbers or specific results. When we use overnight strategies, we have a few strategies that they are specific for overnight usage, such as strategy number 5 for the Forex markets, strategy number 7 for the E-mini. These are strategies that we can get generic results on, such as in strategy number 7 for the E-mini was up over 63% last year, just trading off of daily bars. And that was based, I believe, off of a $15,000 account. Okay. Strategy number 5 for the Forex in the last 2 years, remember, just daily bars, trading the most generic way with hardly any discretion, just taking the most generic rules, it has been up over 130% in 2 years on a $25,000 account. So for daily signals, we can do that. We don't have that for stocks because there are too many different ways to trade stocks. But we have that for the E-mini, and we also have that for the Forex markets. Okay. Let me see if there are any more questions before we have to quit here. 50 period, George asks, do you compute it on close or high? The 50 period simple moving average is just basically computed off the close. It's just very basic. Remember, keep things simple. As I stated, my mentors taught me, they said, Steve, it's the easiest thing in the world to complicate your trading. You can be involved in 20 chat rooms. You can have tons of indicators. You can be looking at all these different strategies, tons of different markets. Anyone can do that. Anyone trading 1 week can do that. It doesn't really take a lot of discipline to do that, but it takes tremendous discipline to simplify your trading, to get rid of all these things that for some reason we've been taught will make us successful. In actuality, these are the things that stand in our way of becoming successful. So strip them away, keep things as basic as possible, and you'll get on that road to consistency. At Specialist Trading, we're not trying to promise you that you're going to get home runs and every strategy and every methodology will produce 200, 300% a year. That in no way is our motivation. We're not trying to do that. What we're trying to instill are the same basic techniques and tips that I learned so that you'll be able to trade 20, 30, 40 years down the road. That's really the true meaning of success, longevity. Not how much money you can make. I know tons of traders on the floor when I was working, other specialists, other traders on the floor, made literally hundreds of thousands, if not millions of dollars in just a matter of weeks or months. And I can venture to say that none of those traders are trading anymore. They've lost it all. So really, what did it matter that they hit a home run here or there or had a great year? If you can't hold on to it, if your methodology is not able to adapt or adjust with the market environment, it doesn't matter. Eventually, you'll probably give it away. So what we try to teach you is sound rules, sound basic fundamental rules of trading so that you'll be able to trade, once again, 20, 30, 40 years down the road. Pat asks, am I going to write another book? No, not. The book is just solely for members of the, we've just about run out of the books, actually. The book is just for members of the courses. So course members receive the book only from now on. I don't have any more plans. I'm pretty much spending all my time just basically teaching and giving webinars such as you see here and teaching other people how to trade. Once again, we have strategies that are traded in over 40 countries, so we've had a tremendous year. Last year was our best year ever. We've only been around for 3 years or so. We have plans to expand more along with Metastock as well. Once again, if you're trading some of our strategies that are on daily bars, just to get back, some people are asking, we generate anywhere from 2 to 5 trades a month on those specific strategies. If you're looking at an ETF, in other words. If you're looking at stocks, oh, you can get tons of signals every day, but we just do not keep records on those because there's just too many. But if you're trading a standard ETF such as spiders or you're trading the daily bars of the E-mini, you can get anywhere from 2 to 5 trades a month. Okay, any other questions before we have to sign off here? Remember, if you really want to take advantage, you can see how well these strategies perform. They're deeply, deeply discounted. Strategy number 4, probably one of our best strategies, discounted from $6.95, which is a great price already, down to $4.95. I really urge you, if you're serious about taking your trading to the next level, to take advantage of that great, great discount we have price going for the next couple of days. Remember, if you have any questions, you can go to our sister site, which actually sells all of our individual strategies and our different programs. That's protraderstrategies.com. Or you can contact our senior trading consultant. That's Don Jans, as you see right here. His email is www.donjans@protraderstrategies.com. Or you can give us a call at 310-844-7220. Well, if there are no further questions, I thank you so much for attending. We plan to have more of these in the future. We'll give you different tips and techniques, different things that have helped me along the road, and different things I hope will help you as well. Please remember to call us or email us and take advantage of that great deep discounted price if you want to. Thank you so much. We'll see you next time. Bye-bye.